The White House announced $50 billion, or I should say tariffs on $50 billion of Chinese imports. Yesterday, we know that Jay Powell, the Fed chief, declined to comment on what trade policy or a possible trade war would mean for inflation, for markets. Clearly, investors are trying to absorb all of this information, and we see stocks are falling, bonds are rallying. Give us your take.
Well, I think a trade war, and to the extent that the Chinese measures reflect that, are certainly not good for economic growth, and perhaps not good for inflation in terms of slightly higher inflation. So it's hard to know. The bond market may be reacting to the potentially slower growth, but not the potentially higher inflation. I think basically it's a push, and I really don't think the situation today in terms of Chinese trade is the reason behind the markets.
What do you think the reason is?
Well, I think investors heard Chairman Powell yesterday. They saw him as pragmatic versus academic, prior Chair Yellen and Chair Bernanke, and they heard him say basically that it was not a day-to-day, but a meeting-to-meeting type of decision. He said the one important thing that you can glean from today's statement is that we raised Fed funds 25 basis points. And yes, the green dots are up around 3% in terms of Fed governors and Fed presidents, but I think the market knows better, and my outlook refers to the possibility and indeed the probability that Fed funds have another 25 or 50 basis points to go, and certainly not another 3 or 4 or 5 hikes.